Two British guys, both 58, both just cleared Suvarnabhumi through the VIP fast-track lane this morning. One spent 900,000 baht on his visa. One spent 50,000. They have nearly identical legal rights to live in Thailand long-term. The guy who spent 850,000 baht more also has zero protection from Thailand's new foreign income remittance tax rules, and his visa agent almost certainly never mentioned that. That gap matters enormously depending on where your money comes from. That is the Thailand Privilege Card in 2026, officially rebranded as the Thailand Privilege Card in January 2024, still widely called the Elite Visa, and now restructured into its most expensive configuration in the program's 20-year history. Here is what that 900,000 baht actually buys you. A 20-year stay permission on a non-immigrant visa basis. VIP airport fast-track at Suvarnabhumi and Don Muang on entry and exit. A dedicated concierge line for immigration appointments. No bank deposit requirement. You are not tying up 800,000 baht in a Thai account. No mandatory health insurance policy. No proof of income, no pension statements, no financial declarations whatsoever. Annual reporting instead of the standard 90-day check-in at immigration. That is a genuinely clean package. No frozen capital. No insurance premiums. No queues. For a certain type of person, particularly someone who values frictionless administration above all else, that is worth real money. The program hit 30,000 active members by the end of 2025. That is not a niche product for the ultra-wealthy anymore. This is a mainstream, long-stay strategy, and the Thai government knows it, which is exactly why the price went up. Now here is what that 900,000 baht does not buy you. Work rights of any kind. A digital work permit. Any statutory protection under Thailand's POR.161 foreign income remittance tax rules. The privilege card is silent on tax. It says nothing. The Revenue Department does not care what visa you hold. It cares how many days you spend in Thailand. Spend 180 days or more in Thailand on your privilege card and you are a full Thai tax resident. Full stop. Under POR.161, income remitted from abroad, dividends, rental income, pension withdrawals, capital gains, is accessible. The card you paid 900,000 baht for gives you no shield against that. None. That is not a technicality. For some people, that is the entire financial story. Let's put the four competing products side by side, because the numbers do a lot of the work here. The Thailand Privilege Card's flagship tier, 900,000 baht for 20 years. That is 45,000 baht per year in pure visa cost, roughly $1,050 annually at current exchange rates. The LTR, Long-Term Resident Visa, Wealthy Global Citizen category, approximately 50,000 baht in government fees for 10 years. That is 5,000 baht per year, $115 annually. 9 times cheaper per year than the privilege card. The DTV, the Destination Thailand Visa, is 10,000 baht for a 5-year multiple entry permission. That is 2,000 baht per year, though the DTV requires you to leave and re-enter every 180 days, so factor in that friction. The Retirement Visa, non-OA, runs roughly 10,000 baht per year in extension fees, but requires 800,000 baht parked in a Thai bank account and a health insurance policy meeting minimum coverage thresholds. So on pure price per year, the privilege card is not competitive. What it is selling is the absence of qualification requirements, and that is where the calculus gets interesting. The LTR's Wealthy Global Citizen category requires proof of $80,000 per year in passive income. Dividends, rental income, pension, investment returns. The Work from Thailand variant requires $40,000 per year, plus documentation of a remote employment or freelance contract. The retirement visa requires a monthly income transfer or a lump sum bank deposit. The Privilege Card requires nothing. No income proof, no employer letter, no pension statement, no health check. You wire 900,000 baht to Thailand Privilege Card Company Limited, a government-owned company, and you are in. That is not a small thing for certain applicants. If you do not meet the LTR income threshold, the Privilege Card stops being a lifestyle upgrade and starts being your only credible long-stay option. That is a legitimate use case. If you are cash-rich but income documentation poor, perhaps because your wealth sits in assets rather than recurring income streams, the Privilege Card solves a real problem. But if you do qualify for the LTR, paying 900,000 baht instead of 50,000 baht is an 850,000 baht decision that needs to be made with full information. And in too many cases, it isn't. Here is the mechanism that matters most in 2026. Thailand's Revenue Department issued guidance under PORAW 161 that made foreign-sourced income remitted to Thailand accessible for personal income tax, regardless of when it was earned, as long as it's remitted in the same tax year. Prior to 2024, the old same-year rule meant people structured around it. That window is effectively closed. If you're on a Privilege Card, spending more than 180 days in Thailand and remitting dividends or pension income from abroad, say 1.5 million baht per year, your potential Thai personal income tax exposure on that income starts around 180,000 baht and rises depending on your total assessable income and available deductions. Your Privilege Card provides zero offset against that. Zero. The LTR Visa, by contrast, contains a hard-coded provision. LTR holders are exempt from Thai personal income tax on foreign-sourced income. That is not an interpretation. That is written into the BOI's LTR framework. For a wealthy global citizen remitting 1.5 million baht per year in dividends and planning to spend most of the year in Thailand, that exemption can be worth more than the entire cost of the LTR visa in year one. The Privilege Card's 900,000 baht buys you convenience. The LTR's 50,000 baht buys you convenience plus a tax shield, plus a digital work permit. The math only runs in the Privilege Card's favor if you cannot qualify for the LTR, or if you genuinely value the no questions asked entry and the longer 20-year term over everything else. So who should actually be on which visa in 2026? The Privilege Card makes genuine sense if you cannot qualify for the LTR. Perhaps your income is irregular, asset-based, or structured in a way that's hard to document. It also makes sense if the 20-year term has real value for you. No renewals, no requalifying, no annual insurance shopping. And it makes sense if your foreign income either stays offshore entirely or you've structured your remittances carefully with a tax advisor who understands the PORAW 161 framework. The LTR Wealthy Global Citizen Visa makes sense if you earn $80,000 or more per year in documentable passive income. You plan to spend significant time in Thailand, comfortably over 180 days, and you remit meaningful sums to fund your life here. The tax exemption is the product. The visa is the mechanism. The DTV suits remote workers and digital nomads who value flexibility over permanence, want to come and go without being tied to a Thai bank account, and whose employers or clients are comfortable with the visa basis. It costs 10,000 baht. It's not trying to be anything other than a simple, long-stay entry tool. The retirement non-OA remains the right answer for someone on a reliable fixed pension who wants the simplest annual renewal process, is comfortable with the 800,000 baht bank deposit, and whose foreign income is either small enough to fall below the personal income tax threshold or is already covered by a double taxation agreement between Thailand and their home country. One number, 850,000 baht. That is the upfront premium you pay for the Privilege Card over the LTR on a comparable 10-year basis. For that premium, you get no income documentation requirement, and a longer initial term. You do not get tax protection. You do not get work rights. You do not get a qualification shortcut that the LTR cannot offer you, if you actually qualify for the LTR. Before you wire that 900,000 baht, answer 3 questions. Can you document $80,000 per year in passive income? Do you plan to spend more than 180 days per year in Thailand? And do you remit meaningful foreign income to your Thai bank account? If the answer to all 3 is yes, the Privilege Card is the wrong visa for your financial situation. Get a tax advisor and a BOI-registered LTR consultant before you make that call. For the full visa comparison breakdown, LTR eligibility checklist, and POR 161 Remittance Tax Guide, subscribe to the Bangkok Brief newsletter at thebangkokbrief.com or subscribe to this channel so you don't miss what comes next.